Good morning, everybody. Good morning, everybody. Awesome. Yeah, so super excited to be here. Thank you guys for having me. Is there a preferred chat channel that I should monitor in case any questions pop up? Live trading channel. Got it. Beautiful. All right, so CPI news data just came out. Essentially what we were expecting. It just popped up. We're not going to talk too much about catalysts today, but what we are going to talk about is some basic charting, what I look for when I'm charting. Just a quick little intro about myself. My name's CJ. I'm the co-founder and CEO of the Trading Collective. We're an education-based community of traders, and today we're going to be going over basic charting. So if you guys are new to technical analysis and are wondering kind of what it is, I'm going to be showing you guys that here today and what you need to be watching and monitoring. So if you guys are using brokers like Robinhood, they don't have the function to be able to chart. There's other brokers such as TD Ameritrade, Interactive Brokers, and Webull where you can chart. I'm actually not using a broker. I'm using a charting platform known as TradingView. TradingView is a free charting platform. Over 30 million people use it. So you guys can chart and follow along for absolutely no cost. If the chat gets too hectic and you guys can't view, you guys can also view that YouTube link right there that I just shared in a live education chat. We're about to max out the people here in Discord, so feel free to follow along there. So what you guys are seeing on my screen here is a standard bar chart. Okay, we're not using Heikinashi, or as I call it, Heineken sushi candles. We're using regular candles here. You also are seeing some moving averages and as well as volume here at the bottom. So we're not going to be talking too much about these moving averages quite yet, but what we are going to talk about is volume. But first and foremost, we're going to be talking about price action. So let me turn the moving averages off and the volume off. So the two things that will not lie when you're looking at a chart are price action and volume. Those are the two constant things that you can always monitor. And what does that mean? So price action is the way the security, right now we're looking at E-mini futures, okay, about 30 minutes till the market opens. So we're watching how the futures are reacting to the CPI data, and due to that, we can also kind of anticipate how we're going to be moving throughout the market. So we got a nice little pop after 8:30 when the CPI data came out. CPI data came out on this vertical line I just dropped here. So we saw a nice pop, a little bit of a retracement. And I'm going to show you guys first and foremost how the best and easiest way to chart price action movement. If you guys have any questions at any point, just bring them up in the live education chat. So I'm just here on a 2-minute chart. I'm actually going to step out and go to a 1 hour. Something to keep in mind is the higher the time frame, the stronger your charts, technical analysis that you're charting, the stronger it will be. So keep that in mind. You see I have a support line down here at 46.71. We're going to remove that. We're going to kind of start fresh. So when I'm looking at a chart, my eyes are now trained to immediately see areas of support and resistance, but I'm going to be showing you guys that exactly. Now, support and resistance transfers directly and goes hand in hand with supply and demand. You know, the basic, the fundamental and core concept of a market is supply and demand. So there's supply ranges where there's plenty of shares available, and then there's demand where a lot of people or a lot of traders are wanting that security at a certain price. So I'm going to show you guys how to chart supply and demand, or better yet, support and resistance. Now we're just here on a 1 hour. We can step it out to the daily actually first, and then we'll kind of work our time frames down, and I'll show you guys how the higher the time frame, the stronger those support and resistance areas are. So we're not going to identify trends yet. This area right here is known as an uptrend. What we're looking at specifically is an area such as this, an area of resistance, okay? So what we would do is we would drop a horizontal support and resistance line at this point, okay? We're not going to be worried too much about this area to the right of it, the right of October, just yet. We're going to see how the chart that we make here from October 13th and prior does all the way up till now. So we see another area of resistance up here. So we'll mark that. Now, when we're popping and seeing a resistance point and we're retracing, okay, this is a retracement. When we pull back from this resistance level, okay, this was a resistance right here. Now what we're seeing down here in this yellow circle is a support, an area of support. Now what does that mean? And how do you trade this? Well, we're wanting to buy support and sell resistance. Buy support, sell resistance. So when we're popping up to a resistance and we start retracing, we were looking for our next support level. Our next support level we ended up making right here. We did have an area of support down here on the daily, which you can see we flushed through on one candle back here in May. Once we based, found support, made a nice green candle, came back up, we resisted again in this area right here. We ended up retracing again to this level. This was another support level, so we'll mark this really quickly. And then we start to pick up. So what is this area right here? Well, this would be known as a pivot point. Okay, if we flush below this 41, 25, 26 support, we can anticipate this support level right here coming in next. Okay, we ended up reversing off of it and breaking over our original resistance level. Our original resistance level being right here. We go a little bit higher, we make a new resistance point, and we retrace back to our previous resistance level, which was then a support level. And this is just how our chart ends up developing time and time again. Time and time again. So once we break over this resistance level, we're looking for our next point of resistance. Once we break down from that resistance, our previous resistance is now a support level. Okay, we start to reverse, see signs of us picking up again. We meet our resistance again, our resistance area again. We come up a little bit higher. We retrace back down to another support level because we've broken over this previous resistance. Now we're building up again. We're seeing another resistance up here. And then we're retracing again back downwards. Okay, this area right here was a pretty volatile area, seeing as how we were not on a large daily support or a daily resistance. Now we can see this area that I just circled right here being a resistance area from earlier, and we ended up rejecting and falling lower. Rejecting and falling lower. Now this TA is what we're going to be using moving to the right. We end up seeing another higher resistance at this point. At this point. And we end up coming back down to view our previous resistance as another support level. Our previous resistance is now a support level. Okay, so we have resistance up here again. And then this area would be support. Now I want you guys to notice something. Notice that when I'm making these resistance or these support lines, I'm utilizing the candle bodies. I'm utilizing the candle bodies, not the wick. Reason being is because that's how I like to do my TA. Now I'm not going to do support and resistance off of wicks and off of candle bodies. I'm going to just stay consistent with candle bodies. Why is that? Because if you're using candle wicks and candle bodies and the same support resistance, or you're defining trends, there's inconsistencies. Okay, it's more important for me that I'm utilizing the candle open and the candle close price in order to chart. Okay, it's more important for me to be able to identify where that candle opened and where that candle closes, as opposed to where that price reached to. Now, there's more that I can build off of with allowing myself that extra wick room. Now, that wick room, that little wick that pops down below here, I can be within a trailing stop loss. Okay, so I'm giving myself, okay, at 45.37, I will begin my trailing stop loss. I'm not going to set a hard stop loss unless we're breaking below our previous wick low at that support level. So I can begin my trailing stop loss below here. Reason being that I don't just set my stop loss at these support levels is to give myself a little bit of breathing room. Okay, it's advantageous to do so. It's advantageous to utilize stop losses, but being able to make your TA off of the candle body and then allowing your stop loss, trailing stop loss, to begin there allows you to see some area of the wick. That way you're not getting stopped out when a reversal could still happen off of that level. If you guys have any questions, let me know in the chat. Okay, we're also streaming on YouTube, so I'll pop over there really quickly and see if we've got any questions. No questions over there. Now, something that I also want to talk about is patterns. Okay, now, not everybody's a huge fan of patterns. I, for one, am. Okay, but certain patterns have higher success rates than others. Now, I'll bring up my little pattern sheet. You guys just give me one moment. One moment. Boom, this is my pattern sheet. So every pattern has, like I said, a percentage of success and failure rate. Our highest percentage of the pattern happening is actually going to be on our downtrending, our reversal pattern for head and shoulders. Head and shoulders is about 85% success rate. So we start to see this head and shoulder pattern we have an 85% success rate of us reversing. Okay, whereas other patterns that I like to view, just that are easy to spot with the eye, are going to be a double top and a double bottom. Double top, double bottom. Now, those only have about 55-60% chance of succeeding as being a reversal, whereas again, our head and shoulders is a much higher probability of reversal. So we started doing our TA here on the daily. Now I'm going to step down to the 1 hour, and we're going to see how that price action moves on a 1 hour and how you're able to make your TA adjust. So we can go in here and we can actually, with TradingView, we can identify our line. So this is our daily, as was this. This is our daily as well. Now we're on a 1 hour as opposed to our daily. We can see this area where we're breaking over. So really quickly what we'll do is we'll make our high point up here for our daily. We'll mark it daily. And then we'll go back to our 1 hour here. So we know that we have resistance on our 1 hour all the way up to right here, about 4,800. 1 hour. Right there. So what are we looking for? And what did we recently see? As far as price action is concerned, when we went from our daily resistance to our daily support down here, we did it really freaking fast. Really freaking fast. We flushed very quickly. From 2 to 3 p.m. on the 5th, we flushed very quickly. So what does that mean? That means that this area between was very fluid. Okay, we have market opening in about 15 minutes. What am I looking for? Well, initially, because we're under this resistance, I'm anticipating that we're going to retrace back to this daily support level. However, the ability for us to come back up to this level today, depending on how the market reacts once it opens, is something that we're going to be looking to see. This is a level that we're looking to see. Now again, we do have 1 hour support just below at 46.97, and we do have 1 hour support all the way down here as well, 45.85. So we'll mark these levels as well. I almost don't want to mark this 46.96 level because it's so close to our daily support. So what we'll end up doing is we'll scoot this down a little bit because of this area right here. This area right here. Okay, so we had used this area as a support a little bit, all right? We had tried to pop back over this resistance once we had identified as a support. We broke below it. We came back up to this area as a resistance, flushed below, made another support. Okay, we came back up. We couldn't even retest this resistance again, flushed all the way down to 45.85, a little bit lower, 45.73 with the wick. Now we started to pick back up again, consolidate again, and then still couldn't break over this resistance. We had to retrace once again back to this support level. Back to this support level from before. Now that we're over this resistance level, we're over this other resistance level, we retraced, and now we're over it again. So this is pretty bullish behavior. Now, again, there's a catalyst that just came out about 45 minutes ago, the CPI data. We're going to wait and see how the market opens and how the sentiment is reacting to this. So we have areas that we can anticipate, 47.04, as well as 47.86. Now, this is our daily support and our daily resistance up here. So these are really strong levels. Again, on the 1 hour, we can identify other areas that we may retrace to. So this area right here looks like a spot that we could quickly retest. So 1 hour, we'll identify this on our 1 hour chart. Now, again, the higher the time frame, the stronger that TA is going to be. That chart is going to have a lot more power on a daily as opposed to a 1 hour, or as opposed to a 15-minute. 15-minute, you can see that we wicked above just a little bit within this area. And what we're kind of making right now is almost an ascending wedge here on the 15-minute. An ascending wedge, or maybe even a bull flag, depending on how you like to see things. Okay? Or a bull pennant, depending on what your preference is for that. So we do, again, we have resistance all the way up here at 47.86. We have support at 47.15, about $10 away. So we're going to wait and see how the market reacts to this. Now what we can do really quickly is we can also bring up our volume. We've been covering price action, now we're going to talk about volume. Now volume and price action don't lie, you guys remember me saying that at the beginning. Volume analysis, this is just as important as price action analysis. Being able to monitor the volume is incredibly important. 10 minutes still open here. We can see that we had a nice spike in volume and we've pulled back. Okay, we're pulling back at the moment. So we got to watch and see if we're going to retrace back towards our 47.15 level. 9 minutes still market open, so we'll be watching this very closely. 15-minute chart you can see is a lot different than our 1 hour chart. And our daily chart, you can see a lot more movement going on within these time frames. These 1 hour and these daily supports, how we're waking above, we're dipping a little bit below, things of that area. So what we can do here is we can make a 15-minute. And now we have just about everything we need. All the levels that we need to monitor for the open. What are we going to be watching? We're going to be watching our volume. Okay, volume starts to dry up going into the open. I'm anticipating 47.15. 47.15, because we gapped up, this would almost be a big gap. We'll be watching. Okay, now we can do a side-by-side here, a trading view. We can pull up SPY. Looks like I have it right there. So we'll be watching SPY. Now for me, I'm a big options trader. Bentley really likes trading commons. I'm a big options trader. So there's a lot of power with options. There's more options with options, pun intended. But what am I looking for when we're talking about pre-market and after hour is going to be a little bit different than what some people would look at. So what I look and what I identify with is our levels from pre-market and after hours. So what will be lying here on the chart here real quickly is our PM high and our PM low / after hour high. So these are the levels that I'm looking for at open. Not only am I an options trader, but I scalp options. So one of my favorite securities to scalp is going to be SPY. Okay, there's really high liquidity with those options, meaning that there's plenty of options available. Okay, it's the highest traded commodity as far as options are concerned on the market. So, like I said, really good liquidity. And what does that mean for an options trader? It means that I'm not going to have an issue getting filled. Okay, when we're playing other companies like smaller or mid caps, the spread between the contracts can be a lot bigger than what you would see something with SPY. SPY contracts are going to be very tight. Okay, so I'm able to play these levels, these intraday levels. Now you see here on the SPY chart, I'm actually on a 6-minute. And we could even go to a 3-minute. Now, the reason I like scalping on a 3-minute or on a 6-minute is because my TA on a 15-minute is going to be incrementally available. So my favorite time frame is a 3-minute. Okay, so I'll make supports. I'll start up my daily. I'm not going to make a whole bunch of support and resistances on the daily. Then I'll go to the 1 hour. And then I'll go to the 15-minute. So my charts on a 15-minute are going to be within 5. Okay, it's going to be an integer of 5. Because 5 times 3 is 15. So that means that my TA will scale accordingly. So some people, if you're making a chart on the 15-minute, will also use the 5-minute. However, I'm scalping, so I like to have a shorter time frame. 2 minute is also a really good interval, but if you're making a chart on a 15 minute, you got to understand that that doesn't scale proportionally to a 2 minute time frame. So if you like trading the 2 minute, I would recommend doing TA on a 10 or on a 20 minute, or as opposed to doing some 14 or 16 minute time frame. I would recommend 10 or 20 minute. Now, a good thing with Robinhood is Robinhood actually shows its charts on a 10 minute by default. So you may be able to eyeball some levels, but it's important if you're actually charting to use a time frame that's consistent. Okay, so with your broker. So something that you won't see me do is making a chart here on TradingView as well as Webull. Okay, unless we're just making our support and resistance levels. I'm not going to be using any moving averages or anything like that on Webull or my other broker, TOS, Thinkorswim with TD Ameritrade. Reason being is I want to keep my TA on one platform. That way there's no bias, no room for error. Okay, fun fact about Webull is their default VWAP, volume weighted average price, is actually a different time frame than what TradingView's default VWAP is. They're different time frames. So the VWAP level on TradingView is different than the VWAP with Webull. So you got to be able to mitigate your expectations with anything, with whether it's your chart, whether it's your time frame, whether it's a moving average or anything like that, as well as a pattern. You got to mitigate your expectations with all of those. So I can reduce and I can mitigate as much expectation by being consistent with my charts. So again, mitigating your expectations is incredibly important as a trader. So you have to be able to reduce that. Grab a sip of water real quick. Okay, check the Discord for messages. What's going on, Tigress? A lot of people in here today. So if we're maxed out and you guys can't view the stream, then I'm going to reply to this message real quick. You guys can view it here. Any questions, bring them up in the live education chat, guys, and I'll take care of them. What we've covered so far is price action. I'm going to be watching volume here at the open. 3 minutes still open. Okay, looking at the 1 hour, or I'm sorry, the 15 minute on the E-mini futures, we can see volume is kind of stair-stepping down from this initial spike. It looks bearish. So what I'm anticipating is a 47.15 kind of retest. We do have wick up here at 47.18. That could be our first area of support. So about $4 away from that. Bring up any questions if you guys got them. I'm going to be showing you live volume analysis. But before I do that, I'll talk a little bit about volume analysis at yesterday. At some of yesterday's levels. Okay, so right here is a good area I want to highlight. So this area right here is known as a double top. Remember, pattern reversal is a double top, downtrending pattern. You can see that we found that little bit of support down here. We ended up making a triple top. But when we broke over that triple top, we did make some higher highs, some new high on day. New high on day action. Okay, and then we already have this high from yesterday, essentially where our wick closed at. So that is our pre-market low and our after-hour high level. So opening under our pre-market high, what am I expecting? A recycled pre-market low. Again, it depends on volume. We're going to look at this double and triple top as far as the volume's concerned, and I'm going to show you guys an example. So you can see how we're stepping up. This isn't the best example, but you can see how we're stepping up here with volume. Now on this candle here, we're seeing an increase in in volume, but on the sell side. So we saw a reversal. We start seeing a stair step downward, which is typically bearish. Stair step upwards again to this level, this resistance level again. Okay, going down to this time frame, this candle right here. My arrows are a little wacky on the 3 minute. So we start to see volume pull back again, an increase in sell pressure. Okay, volume stepping up again in the wrong direction. Volume stair stepping down, stair stepping down. Stair stepping up a little bit, losing volume. When we lose volume like this, when we're stair stepping up and then we lose volume down here, I'm anticipating a reversal. We see on the next candle, we're picking up with sellers, stair stepping down again. Then we start to pick up volume. That's bullish right here. This is bullish, and then we're keeping good volume to get us over this resistance level. Good volume over our lower volume average. So we're looking pretty good. Looking pretty good. I'll pull some of these drawings off. And we're going to go watch how we're opening. Okay, so we have our pre-market high here. If we're able to get over this candle right here on our 3 minute, then we'll be looking good. It looks like we'll be going higher. Okay, so it looks like we're peaking up above it. So our pre-market high, if we can establish above this, not just wick, but we'll actually lock in our first 3 minute candle, this pre-market high will then become a support level. So we'll be watching this. Good volume at the open here. Good volume at the open here. So we came about $2 from our wick over here. So we didn't even come retest this wick high. Before the open. So that's great news. That's bullish. We didn't even come recycle this support all the way. Now SPY is chugging. Okay, the reason that we make these pre-market levels is because if we're breaking out above, that's our first area of support. Now, I like to, when I'm scalping, I like to take options if we're breaking over our pre-market high with good volume like this. Okay, right at the open, you can see how we are under our pre-market high. So right at the open, it depends. Have we gone and tested our support on our E-mini futures? Okay, did we wick down to it? Are we still above it? Okay, we are still above it, so that's slightly bullish. But I'm not convinced that we're breaking our pre-market high until we lock in a candle above. So this next 3 minute candle is going to be our deciding factor for the morning, essentially. The first hour of the day, first 30 minutes, first hour of the day is essentially most of the volume within a trading day. Okay, most people come in and trade for the first hour of the day, and then they're done. They just step away from their computers and they're done. So that's a pretty admirable way of trading. I scalp all day until I get a losing trade, and I keep the hot hand rolling, if you will. Hi CJ, when taking those option contracts, what are you targeting the next support resistance above is your strike price? So for me, I like looking $2 to $3 out of the money, and I look for 3 to 5 days expiration. Now, depending if it's a very quick scalp, I may grab that same $2 to $3 out of the money, but with a 2 to 1 day expiration. I only like playing 0 DTEs, like 0 days till expiration on options, if we're looking really hot and we're going to be recycling a 3 minute support or resistance. Great question, Shamans. One of the crew members in here. So wasn't convinced that we broke our pre-market high. We're now testing it as a support level. Okay, not taking calls just yet. If you wanted to take calls on that initial buying volume, I would have taken profit as soon as we were hitting our pre-market high. You would have gotten a good fill, seeing as how we popped over. Now we're flushing below our pre-market high. Futures are holding up on the 15-minute. Volume is stair-stepping down. I'd like to see a nice pop. But yeah, we are smoking this pre-market high level. So that's why we wait until the candle closes. We use the candle, the candle closing above, fully above, not touching our previous support or resistance as confirmation. Okay, so just taking a call above our, as the price pushes above our pre-market high, is incredibly aggressive. Okay, but if you do so, you want to set your stop loss, not a trailing stop loss, set a stop loss if we go test or just below our pre-market high. So if we're pushing back below, we're able to get out of that contract very quickly. Very quickly, because this is known as a whip. So all the contracts in the morning, right at open, were looking great. We were chugging upwards. We had a nice gap in pre-market, and then we got a big red candle. On the next candle on our 3-minute was a big red candle, and we just gave all that back. So you got to watch out for an IV crush on the calls here. Okay, puts would have been great right here at the top, but how could you have known until we were actually establishing above or below? Now this next candle, this 3-minute candle, is entirely below our pre-market high. What I'm anticipating next is us cycling our pre-market low. On our 3-minute, we do have a little bit of support down here at 470.49. And 469.85 is our pre-market low, but you got to keep, that's our technical low. Okay, we have a psychological level here at 470. It's a psychological level at 470. So if we get a doji down here, doji is essentially a very wicky candle, so really tall wicks, and a small candle body. So I'm not wanting to take any position here, as from a day trading standpoint. I'm not looking to take any position here quite yet. Now we do have a double bottom here in the pre-market on a smaller time frame at 471.50. 471.50. So this seems to be an important level that we definitely need to watch. Seeing as how we're pushing above 471.50, I'm hoping that we can retest our pre-market high here. If we fail back below 471.50, I'm anticipating a $1.50 move to our pre-market low. These pre-market levels, if you guys are looking to get into scalping or just day trading, you gotta watch these pre-market levels and after-hour levels. They're incredibly, incredibly important. Seeing as how we couldn't establish over our pre-market high, we flushed below to our pre-market level here, which was our double bottom. So we have a little bit of intermediary support here in this area. Watching here on the futures, we have about 1:42 seconds left on this candle. So we're watching our volume. What we want to see is our volume pick up over this last candle. We want to see a spike in volume. Any questions, guys, bring them up. And if you're watching here on YouTube, bring them up on the YouTube chat or here in the Discord. Happy to take any questions. Remember, this is our wick high. So 47.18 would be our wick high support level. Okay, from this initial pop, we do have a wick low, 420.75. We'll be watching these levels. So new 3-minute candle started here on SPY. We're over our 471.50 on this candle. So we've reversed off of this support. And again, we're looking to see our pre-market high level. At this point, you could take a scalp back to the pre-market high, keeping a stop loss below 471.50. on TOS and sometimes on Webull, depending on which update you're running. If you're on desktop, it can actually write on the chart where it is that if you put a limit order, where it is that you'll get filled. So TOS is the best for that. So if we were to put a contract to sell here, we got a call down here. We got a contract to sell at 472.20, our pre-market high level. We'd almost be getting filled at that level. Might have to exercise a little bit of patience here. Good volume on the day. We are stair-stepping downwards. We've got a minute 30 left on this next candle, and it looks like we're going to be pushing over our previous candle. That's pretty bullish. Seeing as how we haven't come down and cycled our pre-market low, we had our intermediary support level here at a double bottom. We're looking good. Now we're watching futures. Futures 15-minute candle just recycled. It's looking bearish on the futures, so we'll take that with a grain of salt over on our move on SPY, seeing as how we're still looking pretty bad on our futures. At this point, I was going to say you can anticipate us just looking at futures here, us to retest this level. Futures picking up heavy right now. So if you're still in those calls, you may have been stopped out, depending if you had a trailing stop loss or a hard stop loss. But relatively speaking here on the futures, we're pushing over our initial pop. And it looks like we are running up to 4786 as far as futures are concerned. That is our next daily resistance. SPY hasn't come into account with our futures quite yet. There is typically a small delay. So we'll be seeing how SPY relates to our futures here very shortly. Big green candle building here. Very good volume picking back up on the futures. That looks very bullish. Now is the time to ask any questions. Not buying the SPY movement at the moment, seeing as how futures are looking super good. SPY could move down to our pre-market low, seeing as how we're below this support level at the moment. Once our futures is realized within SPY, we'll be seeing our pre-market high again, unless we whip here at the top. See a couple people typing in chat, standing by for your questions. Do you prefer to confirm support with a retracement test prior to taking position or buying contracts, or will you attempt to take an earlier entry based on volume coming into those levels? It's a great question. So I like to confirm my support with retracement tests prior. Okay, there's just less moving parts. That being said, I am known to take aggressive entries as well. And exactly like you said, I'm using volume for that analysis. Now, if I am taking early entries based on volume, that's usually on 0 DTEs because those are my short time frame scalps. Okay, because I don't need much movement in the underlying to actually scalp that. However, if I'm looking at those bigger contracts like we talked about, $2 to $3 out of money with 3 to 5 days expiration, then I'm looking for larger moves. So pre-market high to pre-market low cycle as opposed to like an intra support level here. So I can do both, and that's kind of the thought process and the action behind both of those. So if I'm taking something just purely based off of volume, almost ignoring price action, then that is something that I'm not wanting to over allocate, in my portfolio for. Okay, I'll take 0 DTEs for a small intra scalp. Okay, looking at a 15-minute, we gave it back. We gave that wick, so we now have a real top-heavy wick. Fully anticipating a 47.15 recycle here on the futures. Seeing as how we could not hold that high pop. Now, because of the delay between SPY and the futures, we very well could retest our pre-market high, not necessarily high of day, because we gave it back really quickly. But I like to combine price action and volume to be able to see my bigger moves. Okay, coming down to our wick high. Our wick is a pretty fluid area. Seeing as how this volume is increasing substantially on the 15-minute here with SPY. Futures, or the E-mini futures. It's great volume. Still anticipating 47.15 recycle. That being said, now might be a good time, right at this resistance level / support 471.15 or 50. I'm sorry, to take puts for a cycle to pre-market low. Pre-market low. We want to keep it tight here. Are E-mini futures a precursor to what will happen on SPY? Yes. Yes. So you can monitor the E-mini futures because at 8:30 we were having CPI data come out. We see a big spike here on SPY, and we saw a big spike on the E-mini as well. Still dojing right here on our E-mini futures. Just waiting to see what's going to come into play next. Great volume. Great volume. Like trading on days like today where there's substantial volume. Good question there, Neptune. Still very large wicks on either side of this E-mini future candle here on the 15-minute. Now, something that I like to also talk about when we're scalping is enter on a 3-minute or scalping or day trading. Enter on your 3-minute, monitor the 15-minute. So you can see me doing that right here. Volatility from the futures are being realized within SPY. Price action moving very quickly. Still anticipating that we cycle pre-market low, as well as this 47.15 low here on the futures. It's about a 60-40 split. That's how I'm seeing that. Something we can also watch here is Apple. Apple is the highest weight within the SPY ETF. Okay, so it essentially is the largest holdings within SPY. So a lot of the Apple movement will be relative to SPY movement. Now you can see Apple having a big red candle already, coming down and finding some support down here. So we would expect this to be relative to SPY, but it's not because there's other companies within SPY. So typically, if you're watching Apple, you can anticipate SPY to be moving the same way. Anyone know the ticker for E-mini futures on TOS? Yeah, it's just going to be ES exclamation point. So if you type in ES, it's going to bring up all the E-mini futures. ES1 exclamation point. We're about, what is this? 25 cents off of our E-mini futures support level on that wick high. Pretty good margin considering. $4,700. A 25-cent margin, not bad. CPI, not too hot. So if we were taking those puts at 471.50, my stop loss would be pushing over pre-market high. This would also be a good place to average up here at or under our pre-market high for more puts. Okay, this is just the process of scaling. Now, when we're talking about scaling with options, you have more options, like pun intended. Okay, so we got those options when we were under $472. Now we're back over $472. So if we were $2 to $3 out of the money, we'd be grabbing those 469, 470s. Now that we're at 472, so if we grab the 469 put, we can go grab the 470 put because it's still $2 out of the money. That's how you should be averaging with options. Okay, don't go into the same, you don't have to go into the same strike and get more of that strike. Now that we've pushed another contract in the money or another put out of the money, we're going to be looking to grab another strike for us to see that cycle. Common misconception when people are trading options is they take the idea behind averaging from commons, meaning that they're going to go buy more of the same strike. Like if it was a common, you go buy more of the same ticker, but with options, you can go buy a different strike. Reason being you don't want to do that when you're talking about options is that the delta is relative to the movement. So if you're grabbing a 469 put and your delta is 0.5, now we've seen this spike up over our pre-market high, pushing towards our high of day. We could be, remember, it was only about a 60-40 conviction level for us to break back over and actually hold our pre-market high level. I'm still anticipating us to flush below. However, if we start to break over our high of day level, it's going to change very rapidly. That conviction rating will change very rapidly. But as I was saying about delta, is if we do see this move back towards our pre-market low, now we've given ourselves, because we changed our strike on our position, we built our position out a little bit more, we can have the ability to make more money faster, because that 469 put, when we grabbed at pre-market high levels or high of day levels, that delta on the 470 will probably be the same delta as that 469 was initially, so that 0.5 delta. Whereas our delta has decreased on the 469, maybe it's at 0.3, 0.35. So if we grab the same contract or the same delta, we'll still have the same price of premium relative to it. So we're not paying anything more necessarily, paying the same amount. Just like if you were to go buy a common, it would just be a little bit cheaper if you average down. We're opening another position. Yeah, you can click on the futures tab there. I forgot that TOS has an entire futures tab. We're grabbing another contract with the same delta. So when we start to see that move to the downside, we're already hedging ourselves for that move. So we've hedged ourselves. If we start to see upside, like we see here on the pre-market high level, we grab more puts. So now when we do see this recycle downwards, we'll be able to take profit earlier and possibly even make more money, as opposed to just grabbing that same strike. It's pre-market high. We have our next 3-minute candle has opened above. So if we were to close above, then I would say this pre-market high is broken. However, we're flushing below it, it would seem, coming back towards our 471.50 level. Huge doji locked in on the E-mini futures. Huge doji. Very wicky candle. Very small body. Any questions, just bring them up, guys. Let's go check on Apple real quick. So Apple saw a nice little pop. That's why we can expect SPY to pop a little bit. So if Apple were to move and go retest its pre-market high, then we would more than likely see a new high on day with SPY. Pretty wicky candle here at the top. Or here at the bottom, I should say. On Apple. Check back in on SPY here. Now, no one level has been broken. No one level has been broken yet here on SPY. Even if we lock in this candle over pre-market high, our wick still touched below. Still went below. Any questions, guys, bring them up in the live education chat. Or if you're watching on YouTube, feel free to drop a comment. I'll answer any questions. Viewing this pre-market high as a support level here on SPY, you can see why these levels are so important. How we wicked and candle body right down to it. 472.20 is that level. "30 seconds into this new 3-minute candle. Our previous candle on the E-mini futures, we had a wick below our wick high, coming right towards our 1-hour support level. Still looking like, based upon this 15-minute candle that's building right now, like we're still going to go cycle our 1-hour bottom. Again, we got to monitor Apple here as we're watching SPY. Apple seems to be reversing again. Seeing as how this previous candle, we could not get over the candle before this 951 candle. We couldn't get over its highs. So we saw a small body on the next candle, and now we're opening below, right at that same price. Our wick high on this candle is still a little bit lower than the previous candle. So that's looking bearish. That movement's looking bearish. SPY trying to get a little bit higher. So if Apple were to just magically reverse off of this level and make a higher point, reaching over 176.37, if we can touch 176.37, then we'll see SPY break over its high of day. More than likely. Now it looks like this wick came all the way down to 472.20. Seeing how SPY's pushing right now, Apple must be doing a little bit of something. There we go. We haven't pushed over our 176.37 quite yet. So we haven't made a new high of day just yet. The only choice I see is ES, and that doesn't look the same chart setup as he has. You also got to keep in mind, I have a different, I'm on a 3-minute. I mean, you could just open, like, go to your browser and look at TradingView. Just pull up a chart if you wanted to get this same interval. What I can do real quick is I can save this and then I can just drop this into the chat as well. If you wanted to open up exactly my chart, you can just click that link in there and it'll pull up exactly this. Okay, so Apple must have been doing something. New high on day on SPY. Yep, it looks like we did get over that that 176.37 point on Apple. E-mini futures still aren't selling me as far as us locking in this high of day, but this candle is above. This candle is above. So because we had our 60-40 kind of confirmation or conviction level, I should say, of us going down to see our pre-market low, now we're back over our pre-market high. Now it looks like we'll be making new high on days throughout the day, seeing as how we're establishing our pre-market levels over our pre-market levels. What are we going to need for that to happen? Well, we'll need the E-mini futures to relay what's going on with SPY. That's not necessarily how this works, though. So what we're going to be looking at more importantly is Apple. Okay, we need Apple to be getting over its high of days. Our pre-market highs on Apple are 176.83. As far as the body's concerned, we could even move this up to our wick up here just to monitor. Now our futures are realizing the move. Apple is showing some instability down here. We do have stair-stepping downwards volume. Our last candle volume was at the same level. So we have a minute 30 left on this 3-minute candle. It looks as though we may push over previous volume candle. So that's really good. Really, really good. It's super wicky on the 3-minute for SPY. We'll see if we're going to retest our pre-market high one more time before we end up taking off. Again, we're watching Apple here. A lot of volatility on days following CPI data. So you're going to see these pre-market levels be tested time and time again. That being said, over here on SPY, pushing over pre-market high, you could take calls up to as soon as we are pushing over. This would be a great example here. As soon as we start to push over there, shamans, we could be taking calls just to high of day level. Just a high of day level. Those would have paid out just based upon volume. We ended up hitting our volume target, or I'm sorry, not our volume target, our price action target, which was our candle body high right here, based upon an increase of volume. So we had stair stepping downwards and then we picked up on volume, but our stair stepping downwards, this volume as far as relative to price action was a little wonky. So this wouldn't have been just looking volume to see a pickup to spike to new high a day. This would have been just watching price action here. Futures, big green candle. So we would need to push over 4734 in order to lock in a high on day for futures. If we can't push over that point, then we will recycle pre-market high. Having levels is incredibly important. Charting price action on bigger time frames is incredibly important. Incredibly important. Doji above our high of day. Wick was touching it. Expecting pre-market high level to be retested. 15-minute candle here on the futures. Still working, about 6 minutes left on it. Watching it very closely. Any questions, just bring them into the live education chat, guys. Be happy to answer them. This is basic charting. Now what we can do is we can throw up some moving averages. This is actually a free indicator I'm getting ready to release. Actually, not this one. This moving average array right here is what I'm looking to release here. 950 and 200 EMA is what I have up on my left screen, left side of the screen. 50 and 200 is what I have on the right. $15-minute candle on the futures is kind of struggling to push up to that level. Still watching volume. Volume was huge on the previous candle. There's our pre-market high retest. Scalps from high of day back to pre-market high would have been great. Haven't locked in a candle. Scalps from the high of day to pre-market high level would have been great. Still haven't locked a candle over our high of day. We do have a pre-market candle over. It was a doji. I don't like taking dojis for calls like this. I wouldn't take this candle for a call. Okay, seeing as how this movement is going on with SPY, let's see what Apple's doing. Apple had a big red candle previously on a 50 EMA at the moment. If we flush below our 50 EMA, we will recycle our 175.50 level, which should almost be low of day, session low for Apple. Will this lesson be recorded? Yes, it will be. I am recording it, actually. Watching this 15-minute here on the futures to see if we can break over our high of day wick. 47.35 would be a new high on day for the futures. Retesting our initial high on day. Candle body. We have high on day wick all the way up here, just under 473 at 472.90 on SPY. Apple must be bouncing off of its 50 EMA. Big green candle on Apple. Watch for pre-market high. This should take us to a new high on SPY. And that's how Apple moves with SPY, and SPY moves with Apple. Great movement going on here with Apple. SPY showing a little bit of that as well. Pre-market high resistance here on Apple at 176.88. That is our wick high. That is our highest point. Session high on Apple is 176.79. About 9 cents away from our pre-market high point. Few seconds left here on the E-mini futures. Can we push up another $1 or so from this this high point? That'd be great if we could. 30 seconds left. We'll see how it plays out. Ooh, so close. 10 seconds to go here on the futures candle. Yeah, no worries there, Kurt. I'm recording this right now. It's being streamed to YouTube and will automatically archive at the end of this. All right, looks like we were able to get over our high of day on the futures. Let's see if we can lock that in or if we're going to flush back below. Apple pushing pre-market high level, just tapping a little bit above it. Now this fib level that I have here is on the 1 hour. 17709 is our next resistance point for Apple. I am anticipating resistance at that level. So that's a 1 hour fib level. SPY should be high a day. There we are. Just based on the action from pre-market, looked like a very bullish open. Low conviction puts would have been stopped out. You could have averaged a pre-market high point. Could be averaging puts now for another pre-market high cycle. At this point, I'm not looking for puts necessarily. Just watching how we're pushing over E-mini futures high point. About 40 minutes into the trading session so far. Nice analysis. What's your Twitter? My Twitter is here. I'll drop it down below. 1 second. Stand by. I am. I'm teaching classes. Let's see now. 1, 2, 3, 4. Teaching about 5 to 7 classes a week. So 2, 4, 5. Yeah, 5 to 7 classes a week. And yeah, I'm available if you guys want to DM me on Discord or here on or there on Twitter. I'm available. I am available. My big thing is options and price action. Love getting into the nitty gritty. I also develop algorithms as well, so that's fun. Specifically, TradingView invite-only scripts. So I'm actually Trading Collective's partnered with an analytics company, and we've developed an algorithm known as the Selene Algo. It's about 4,500 lines of code. About 1,450 hours into that code. More hours going in this weekend. I'm not a coder. I'm a developer on the side of the testing. So I'm the main tester. I've got about 8 months of testing this one algorithm. I'm not showing the algorithm at the moment just because I don't want to muddy water. I want this to just be an intro to charting class here today. Because if you can't get price action and volume analysis, then having an algorithm is not going to help. You got to learn the basics. You just do, because it's another tool in the tool belt. Okay, I'm never just taking a position based off of one singular piece of technical analysis. I'm stacking. So whether it's a 50 EMA bounce as well as a support bounce, that's what I'm looking for. Are we over or under VWAP? Okay, how's our volume looking? Is our price action relative to our volume? Are we having a divergence of sorts? I like to stack my technical analysis on several things before I take a position. And that being said, on the flip side, I will get out of a position if one of those pieces is being broken. So say we're scaling on our 9 and our 21 EMA, and we break our 21 EMA or our 9 EMA or something, depending if we're over or under, I'll get out of that position, especially if I'm in the green. Another great process, kind of talking about the mentality of trading and the psychological kind of warfare that goes on in your head when you're trading emotionally. It's incredibly important. I'll just quick disclaimer. It's incredibly important to the best of your ability, be disciplined with your emotions, separate your emotions from trading. I mean, that is incredibly difficult, and it can take years to get to that point. I've been trading for 10 years, and I've still can find myself being emotional in trades. I'm a big sports gambler as well. So, if I'm watching a game, I'm like, screaming at the game, like, yeah, like, come on, 4 more yards, get 4 more yards, my over under. But when it comes to actually trading, I'm the first guy that's going to take profit. So if I'm ever in a trade and it's green and I'm like, man, should I take profit? Like, that should be, as far as the mentality goes, you're doubting yourself or your technical analysis. If you're losing confidence on a play, that should be your exit. If you're ever like, I wonder if I should take profit here because you're up 200% on a play, absolutely. What I would recommend starting with is, if you're up that significantly high, is I would recommend that you just cover your cost basis. What does that mean, covering your cost basis? So say we've put $100 into the trade because we bought 4 contracts. So I'll write it out here on the screen. So we bought 4 contracts, or we allocated $100 towards a trade, okay? That was 4 contracts of SPY or whatever at SPY. Let's say it was a 470. Yeah, let's say it's a 473 call for a 112 expiration. Okay, this is something that you would see on a move like this. We got these contracts at 0.25. So that means it's $100, okay? Now, if we see this pop, how we pushed and made a new high of day because we were breaking over a pre-market high, we retested our high of day. Let's say that those contracts are now worth, so it was a pre-market high to HOD, high of day. Okay, and let's say during that time, our 473 call with a 112 expiration is now worth 0.50. Okay, our 4 contracts are now worth $200. Okay, our 4 contracts are now worth $200. So if you're like, damn, should I take profit? We're actually making a new high of day. What do I do? Well, this is what you should do. Sell 2 of your contracts. Sell times 2 of your 473 calls with that 112 expiration at 0.5. Now, what does that do? That nets you $100. Cost basis equals covered. You have pulled out your original investment. You have pulled out now your original investment. Okay, so if we took our pre-market high calls when we started to get over our pre-market high within this range, this would actually be a tighter range right within here. Whoops. And we're looking to take our high of day. So this would be your entry, your theoretical entry, right? And then right here on this pop, this would be your exit / cover cost basis. Hopefully this is starting to make a little bit of sense with you guys. So what happened? We bought 4. We buy 4 contracts at 0.25. At 0.25. buy 4 contracts for a total of $100. That cost us $100. Okay, that was our entry down here. Now we're taking it to our exit at high of day, and are covering our cost basis. Covering our cost basis on that pop. So we've covered at high of day. 4 contracts were worth $200. What we did is we sold 2 for $100, 0.5 each. We've covered our cost basis. So now you can essentially let your contracts run. Let them run if we're going to continue to see high of day. Looking at our futures, we're seeing that we're making really good ground with our futures. Hopefully that's relative to what's going on with Apple. I'd say Apple, based upon SPY, popped over that 1 hour place that I was anticipating resistance, and then we've now retraced to that as our support level. Let me save this chart really quickly. We'll go check on Apple. So we did pop over, and then we used our high of day, or a pre-market high, as a resistance point, or a support point. So now we'll go back to SPY, and what's happened with our position? Well, I lost my little, there we go. There we go. I lost it. Okay. Well, we covered our contract. We covered our cost basis up there. And now we're waiting to see if we're going to retrace. So at this point, from an emotional standpoint, we've already covered how much it costs us to enter this trade. If we sell at any point, even if it's for the contract's 0.01, that's still profit. So we've made the position free. How do I analyze cup and handles? Do I wait for breakout? So me taking a position off of just a cup and handle is going to be hard. However, what that cup and handle typically builds are support and resistance levels. Okay, so when we see that second point of our handle for our cup and handle, depending on what's going on with our volume there, okay, if we were stair-stepping downwards and we were dojing over a support, yes. But if we're stair-stepping downwards and our price action's breaking that support, then that's a different story. So at this point, if you had taken calls at the pre-market high, you had exited at our high of day as anticipated. Okay, we were over making a new high of day. We've already covered our cost basis. Now we're still well above our entry, still 40 cents over our entry, and we're just sitting on profit. You can take this profit whenever you feel. It's completely up to you, because you've already covered what it costs to enter the position. So Apple's probably below our pre-market high, which we are. Could recycle our 50 EMA here on the 3-minute. And we could be just retracing our high of day level on SPY. That bit of advice regarding covering cost basis is something that a lot of new traders struggle to do, in my opinion, says Shamans. He also says, I know that I did when starting out. It alleviates so much stress for beginners. Yes, guys, alleviating that stress. Mitigate as much exposure as possible, okay? Mitigation is kind of the key for all of this. And how do you mitigate? By being disciplined, okay? Covering your cost basis when you can. That's going to be huge. If you guys are able to actually look at your phones, whether it's for the first hour of the day or what, and just trade these pre-market levels, utilizing the concepts we just talked about and stacking that with covering cost basis, you will see a huge shift in what it is that you're locking in time and time again. Now, it's very advantageous to scalp because what you're doing with scalping is you're looking for small shifts in the underlying, okay? But the great thing about scalping is not only are you not looking for big moves, but you're consistently locking in small profit. Okay, utilizing the theory of compound gains, that does wonders for your account. You know, I'd rather take 5% trades as opposed to 20% trade. Utilizing the same, amount for those 5% returns, because of compounding those gains, you're going to end up seeing even more. Even if it was 4 or 5% trades, it's still going to be more than a 20% trade because of the way that compounds. Apple more than likely retested its 50 EMA, seeing as how we're dipping below high of day yet again. Apple has not come down to see its 50 EMA quite yet. Okay, this move on SPY will probably be reversed. There we go. That was just separate SPY. Oh, hey, there you are. What's up? I missed you. I missed my beautiful little drawing here. Look at that. Focus on this, guys. Focus on this. I'm actually going to drop this in the chat. I'm going to drop that in the chat. Position cost $100. Buy 4 SPY contracts at 473, call 112. Pre-market high to high of day. 4 contracts are now worth 0.5. Okay, that's a 100% return. Your position costs $100 and is now worth $200. Now we're at a new high of day, and it's like, what do I do at this level? What do I do? Okay, if you're doubting yourself that heavily, just get out. You're already 100% up. But if you really want to just utilize covering cost basis, utilize that aspect of it, sell half of your contract, just sell 2, okay, at 0.5. Now you've covered your position entry. So now you've mitigated that emotional risk of putting money in and not feeling like you're going to get it back out. Okay, just gotta do a little bit of customer support while I'm in here with you guys. This is really helpful. Appreciate you and taking the time to stream this for us. Of course, guys. You know, whenever it's me in here, or it's Bentley, or somebody else, another educator coming here to teach you guys something, everybody has, you know, what they're doing just a little bit different from the next person. But this cost basis here should be across the board, okay? Across the board. Now with options, you're going to have a lot more opportunities to cover your cost basis, seeing these kind of scalping returns, okay? Because we're taking 0 DTEs or short expiration, short days till expiration, and we're looking for small shifts and pops, you know, high of day, new high of day, pre-market high breaks. You know, we're looking for these kinds of plays. It's hard to get a common to push 50 or 100%, even if it's a small cap. You know, those low float biotech pharma companies, you know, they do move like that, but covering cost basis doesn't get any easier at any point. But when you have more opportunity, then you're able to exercise that accordingly. So you're able to exercise covering your cost basis a lot easier typically when we're scalping options. Okay, so if we had covered our cost basis on that new high of day, Now we're retracing our pre-market high level. We're back to entry. So we could have done one of two things. We could have at our entry set our stop loss to this intermediary support level at 471.50. That could have been our initial stop loss upon entry at our pre-market high break. Okay, now that we've popped all the way up over here and we've taken a little bit of profit here, we can also move our stop loss up to this high of day. So at this point, you would have been out of the trade completely. You would have covered your cost basis up here, more than likely north of 100%. And when we started to recycle, you would have taken your profit off the table before we even hit pre-market high again. Now that we're retracing back to pre-market high, if you left your original stop loss, you can move that to our entry at pre-market high. You're still in that position. Boom, you're out of the position now. Congratulations, you just locked in however much profit, more than likely a 50% profit. Okay, great. Now what are we looking? We're looking for our 50 EMA bounce, possibly a 47150 cycle. But because we still have about 2 minutes left on this candle, depending on what's going on here, we could still lock in above our pre-market high. Seeing how the candle's moving now, not relative to our futures, we're going to go see what's going on with Apple. More than likely at this point, cycling our 50 EMA. Cycling towards our 50 EMA here on Apple. If this starts to pick up anymore with Apple, then we're going to see a big cycle back to 471.50 on SPY. Okay, the momentum's picking up here on Apple. Looks like we are going to push down to our 50 EMA. On Apple, we're doing the same thing here on SPY. Watch for 471 support bounce. Now, that being said, if we had taken those puts we discussed earlier, we bought more at the high of day or at pre-market high, we're still in the green here. Because why? We're looking for that big pre-market low cycle. So these aren't zero DTEs. When we're looking for scalps like pre-market high to high a day, that's about a 50 cent gain on SPY. However, pre-market high to pre-market low is almost it's a little over $2. So what we're anticipating was a larger move from pre-market high to pre-market low. So stepping out 3 to 5 days expiration, averaging at pre-market high or at high of day. Remember, we're moving our strike up. Okay, we're still getting that sweet 0.5 delta like we talked about. Now we're just at our original entry point at 471.50 for those puts. And guess what? Because you scaled into your position and you bought at another resistance, at a higher resistance point, you would be in the green right now. So at this point, you could close out that trade, not even seeing the pre-market low. You've already hedged yourself against the entire move. So you could take profit here on those 3 to 5 days expiration and still be up anywhere between 10 to about 15%. Because you may be a little bit green on your original 469 put, but you'd be more green on your 470 put or your 471 put. Hopefully that's making a little bit of sense. I'll actually take this chart and break it down a little bit more for that put play earlier. So we'll say that our entry was down here. This was our put entry. Okay, put entry, and this is about scaling here. This was our put entry. Now when I talk about entering and scaling, I do so in 3 stages. I do so in 25, 25, 50. Okay, 25% is my first entry. My next 25% would be my second entry. And then 50% is when I'm all in the position and we're seeing, and why am I doing that last 50%? Because I'm getting confirmation of my technical analysis. So what we could have done, this was our put entry 1 out of 3. This was our put entry at 2 out of 3. So I'll break down a little text chart. I'm going to turn my moving averages off because I don't want this to get too busy for you guys. I'll turn volume off as well over here. Oh. So what have we done over here? So let me grab the text and we'll say that our put entry, or puts, we're wanting to put $100 in. Or we'll say that, actually, realistically, we'd say that this was about $400. So we'll say that we were going to put $400 into puts, because that's more than likely how much this position would cost. 3 to 5 days expiration, $2 to $3 out of the money. So our first position costs us just $100. Okay. Our initial one was at $4.69. At $1. Okay, this was our first one, so this was 1 out of 3. Just bear with me, guys. Now our 2 out of 3 entry was our SPY 470 put at, again, $1. $100 is what that's worth. So we still have $200 on the table. Now the reason that we did this, again, we're scaling in. So what we would end up doing is, depending if we're going to close below pre-market high again, this would be, okay, are we wanting to get our last 50% entered? So the first entry is just your first entry. Now our second entry is going to help our average of our position as a whole. So this is why we entered up here, okay, on the relative dip. Speaking in put terms here, okay, we popped up on price, but that was a dip in puts. So we grabbed another put up here. Now that we've cycled back down towards our original entry, you're not going to see this necessarily, this initial put giving you a return. However, this 470 put is giving you a return. This 470 put is giving you a return. So the last 50% or the last 2 contracts, if we're, depending where we're at, we might grab another 470 or a 469, a couple of 469s. We would be looking to see a cycle towards pre-market low. Now, during all this time, what did we do? We scalped calls up here, but we stayed. Those were 0 DTEs because we were just looking at pre-market high to high of day push, made a new high of day. We took some profit off the table, and now looking here, we might want to enter our last 50% for our pre-market low cycle. We'll monitor Apple really quickly, or we'll check on Apple really quickly and see what's going on with it. Still over the 50 EMA. I can pull that up again to show you guys. Still over our 50 EMA on the candle, but our wick is below it. So looking back at SPY here, we had entered our last 50% as we started to get confirmation under our pre-market high. Now we're looking for a pre-market low. So we'll write in our 3 out of 3. 3 out of 3. SPY. We'll say that this was a 469 put at $1. This was 2 of them at $1. So that was $200. Now all positions would be green. So this was our third point. Put entry would be 3 out of 3 right here. Okay, now why? Why did we do that? So we entered our first put because we were right on our pre-market kind of midpoint at a double top or a double bottom when we were failing below. So we decided we wanted to take a put for the pre-market low cycle. Okay, we averaged up here as we were retesting our high of day, pre-market high, all that good stuff. We actually were able to place some calls here at the top, but we're still entering and we're making that position even more free by taking calls, scalping calls. So now we're looking to take puts out here all the way for a pre-market low cycle. Now at this point you could have covered, you could have actually already exited your entire put trade, okay, for profit if you were just you're still like, I don't know if we're going to make a new session low. I don't know if we're going to push to pre-market low. Because we had our put entry 2 out of 3 up here, we had the option to take profit on this double bottom, okay? We had option to take profit at our session low once we hit it again. So we could have closed out of our position, or we could have just done our original plan, last 50% entered. Now let's see if we cycle pre-market low. But we could also, again, we could close our original entry. We could not take our last entry, and we could take profit on our second entry. Looking how futures are moving, let's just get confirmation here with Apple. And it looks like Apple has broken its 50 EMA, expecting a low point, our session low here on Apple. We're not necessarily thinking Apple's going to go make lower lows on the day. We do have pre-market lows at 174.68, but Apple is chugging towards its session lows. So we are in the green, okay? We are all the way in the green on everything that we've done so far today. We didn't stop out of our puts. If you wanted to stop out, you could have stopped out if you were scalping. That's what I would have recommended. But if you're entering 3 to 5 days expiration, you're sidestepping a lot of that theta decay. Theta is the amount your contract decays over a period of a day, okay? So if your delta is 0.5, and your theta is 0.1, that means for every dollar it goes up, you're going to make 0.5 on that contract, or $50. Now, for every day you hold that contract, you can expect your contract to decrease in value by 0.1, that theta amount. Okay, we're getting a big candle here on the 15-minute for the futures. Apple's trying to just hold on and not make a new session low, but it looks like we're going to cycle our session low. Maybe even break and make a new session low. If so, it doesn't look like it's going to be too crazy. But we are green on absolutely everything we've traded today, guys. Again, this is our $400 puts. This was our initial. This was our average. And this was our final entry, and this was on confirmation. It's pretty hot, I'm not gonna lie. So you guys are big fans of what Traderverse is doing as much as we are as a trading collective, and me individually is. Be sure to thank Mike for kind of helping orchestrate this whole thing. I'm going to be actually doing a class every Wednesday morning at 9 a.m. So anticipate this to be on a weekly basis. Okay, this is completely free of charge. This is just trying to give back to the community that's given us so much. And yeah, thank you guys so much. If you have any questions, bring them up in the chat. We're going to see this play to fruition. At this point, we're making so much money off of these swing puts. You could just go ahead and take profit, not even worry about cycling our pre-market low. That's more than likely what I would do. Just sitting on a nice bag here, I would just say, okay, you know what? I'll take my 20-30% gain. We already scalped for 100%, 150%, depending. So we'd be looking at SPY calls as soon as it approaches pre-market low. Exactly. Made the put play. Thanks for the analysis. Right on, man. 73%. Holy. I had to pull this up on screen. Look at this. Look at that. So VJ took the 468 puts. 2 days expiration. Cost, I was about 9 cents off. Cost was 109. Took 2 of them. And we ended up seeing a really nice return, about 73%. I'm eyeing the calls, you think 473. Now, here's the thing. You could technically play, what's known as a dead cat bounce. But, dead cat bounce isn't relative for big ETFs, such as SPY. I mean, dead cat is really when we're talking about, like, low float or small caps or micro caps even. But you can technically play the quick bounce off of a pre-market low. But at this point, we would be moving our stop loss to our first put entry back to the green on everything. So if we start to push 47140 or 47150, we could just market sell out of all of our positions and be green on the day, locking in at least 50% for you there, VJ. Good call there, man. Can't be mad at that. Can't be mad at that. And again, if you guys are looking to get into scalping, 0 DTEs for those real small, like 10, 20, 30, 40 cent moves, okay, that's what I recommend the 1 DTE, 0 DTEs for if you're just looking for real small moves like that. But if you're looking for a big pre-market high or pre-market low cycle, then we're taking those 3 to 5 days expiration. Okay, if you're just getting into scalping, I would not recommend trading 0 DTEs until you're confident enough to do so. Okay, 3 to 5 days expiration are going to be a really good place to be. Even 2 days expiration if you're just trading in the first half of the day. First half of the day, you can trade those 2 days till expiration and do great still, okay? We don't want to hold 0 DTEs more than an hour, or really you don't want to be, if you say you entered at, right at the open, you don't want to be holding that position past 11:30. Okay, at 11:30 you really got to make a decision. Okay, remember also for 0 DTE, something to keep in mind is you can't enter past 2 p.m. Eastern. You can't open a new trade on a contract expiring the same day past 2 p.m. Eastern. They just don't like that. Now, depending on your broker, maybe your broker allows you to. Technically, SPY will trade options the last 15 minutes of the day. I know they're trying to do this 24/5 thing. But here we go on the futures, pushing a little bit lower on this 15-minute candle. I hope you guys enjoyed this lesson so far today. This is very, very, very basic charting. This is just price action here. We're utilizing volume. Okay, we're looking at volume spikes, what's going on. We're seeing the volatility throughout the day, but we're really just trading price action here. Price action and those hips, they don't lie. All right, just keep that in mind. Okay, we're pushing towards our wick high with this kind of momentum. Maybe this candle or the following candle anticipate our 1 hour low push here on the futures. Let's check in on Apple real quick and see if it's able to get back over. Let me save this chart before I switch. Let's see if we're able to get back over our 50 EMA. It doesn't look like it. Our 50 EMA was up here, 176.30. Looks like we're going to cycle session lows on Apple. Pulling SPY up again here. 15-minute over on the futures. Really close to our 1 hour, 47.15 target on that support level. Our pre-market low Looks like it's going to be happening. Keep in mind 470.16 is the session low on SPY. That could be another area for you to take profit on those puts. I typically stayed away from 0DT options, but you have opened my eyes to new opportunities. My concern was ability to sell contracts with 0DTE. Thanks again for the session. Yeah, of course, Shamans. That is a very valid concern. Okay, but the reason I'm trading and looking at SPY, not only is it an ETF that coincides with market sentiment, as well as we have the E-mini futures here that we can monitor happening over the previous day. We have a whole nother chart to base levels off of. But the liquidity on SPY or the Qs or even VIX doesn't have the best liquidity, but SPY and the Qs have ample amount of liquidity. Now, when you're talking about scalping, there's limit orders as well as market orders. When I'm scalping, I just like to market order unless we're setting those cover cost basis. So if I'm stepping away from my monitor, taking a call or teaching a class or something like that, and I'm not monitoring my position very heavily, I guarantee you I will always enter an order no matter what and sell and set a limit sell at 100% profit for half of those contracts. Just in case we pop, we hit it, I'm not looking, great. Okay, another really cool feature here on TradingView, if you're on the desktop, you can right click and add an alert. You can have it you can show a pop-up on your screen. It gives an auditory ding. You can have it send an email. You can even have it send a text to your phone. So that's a huge thing within TradingView. Being able to send those levels to you like immediately, like they do not mess around. There's our 1 hour break. Okay, now we're looking at our daily support. 4704 for futures. We do have mental support. Remember that psychological level at 4700 on the futures. Anticipate a little bit of a push there, but I'm fully anticipating us bouncing off of our daily support at 4704. Great job. Great job, everybody. Great job, VJ, for the put play. Happy to help with the analysis. Now, when we're seeing big pushes, like momentous pushes like we're seeing here on our E-mini futures, whenever we're getting a big candle push down like this here on SPY, I love to sell on big momentum pushes because we're getting an IV spike. And it helps if we're market selling to capture a lot of that. If you're trying to set a limit during a momentum push, it can be difficult unless you're being very, what's the word? Conservative with your limit sell. Now, if you're scalping and you're trying to get out on a momentum push, you can set a limit. However, it would be more advantageous in that scenario to do a market sell. Okay. Otherwise, it may not hit the limit if you set your limit high. You can be conservative with your limit. Okay, with TOS or with Webull, you can actually chart the option and see relative to that price action on the chart where the contract was at. How much was it worth? Awesome session, very well articulated. Thank you, Tigress. I think I followed you on Twitter. I mean, huge returns on VJ, for VJ there. You're probably up nearing 100% if you're still in the trade. I think you showed me 73% on this candle here, right over 470. I think 80 is where we were at. So another 40 cents downward, you might be up 100%. Now, in that case, yeah, I have to be in the trade since I already made my weekly 3 DTs. Well, that sucks. I would switch over to Webull. I'm actually going to DM you a Webull link. Two free stocks if you click that link there, VJ, and make a deposit. I just had somebody DM me a question. I'm going to read it out here in a second. So TradingView on the free subscription only lets you have 3 indicators up on your screen. So I'm actually looking to publish this moving average array shortly. It's fairly simple code. I'm going to publish it for free because why wouldn't I? I have paid indicators like the Sling Algo, but this allows you to have 6 moving averages as well as 2 VWAPs. So there's always a way to finesse TradingView. What I've done is I put 6 moving averages. You can change it from EMA to SMA. It can be on close, open, high, low. You can change your moving averages however you see fit. You can have 1 VWAP on open. You can have 1 VWAP be on close. You can change the colors, style, thickness of the lines if you want it to be a histogram, if you're one of those. You can have it be whatever it is you want to be. So be on the lookout for me to publish that shortly. Again, that's going to be for free. So if you guys are looking at TradingView, like I said, they limit typically how many people or how many indicators you can have on your screen. As far as sentiment goes, VJ, I think you'll be fine on those puts. Okay, this was a scalping class. You need to get on Webull for a cash account. Thanks, buddy. Have a Webull account. My funds are in transit. Oh, gotcha. Yeah, so make sure your Webull account is a cash account. Then you won't be penalized at all for making day trades. You just can trade up to the amount of settled cash you have in your account, and that cash settles overnight with Webull. So if you have $1,000 in your account, you could do $100 trades within a day. And then if you open and close all of those in the same day, no penalties, no PDT penalty at all. The next day, you'll have the $1,000 plus whatever profit settled, and you can use it again. So if you did 50% that day, you can now do $1,500 trades the next day. So looking at futures, SPY should start moving up to catch up right. Yeah, what we're hoping, as far as the bullish sentiment goes, what we're hoping is that we can reverse from this point around our 1 hour support and pick up. But now we're so far away from our session highs. It looks, because we had one huge candle. More than likely, the bullish sentiment is flipped. I can actually pull up my algo real quick and show you bullish kind of sentiment. So bears is 66%, bulls 33%. 9 EMA we're under, VWAP we're under. Trend direction has confirmed our uptrend, but we are ideal for a short signal. Bullish on our OBV, our on balance volume. Trend direction on the 50 is bullish, 200 is bullish, 1000 is bearish, but this is on a 15-minute time frame. If we switch to our 6-minute, we're going to get a much different story. We're under our 50 EMA, so we're bearish. RSI is at 42%. Our MACD crossed bearish 2 candles ago. Trend direction is consolidating down here, so use caution. Very bearish on our OBV on the 6-minute. SMA 50 we are under currently. Holding the trend direction as bullish right now since we're still over our 200 EMA. But we very well could get a short signal if we're testing our daily support level. Our bear bull ratio is 60-40 split at the moment. We'll turn that back off, but that just gives me a finger kind of on the pulse as what's going on. Okay, let's check on Apple real quick. See if we cycled our session low. Looks like we double bottom at our session low. So that was our target for Apple there. Now, if we can't establish over our next resistance at 459.90, if we can't get over this point, then we will have a bearish continuation to the downside. So it's looking bleak for the bulls out there right now. Okay, it's looking very bearish at the moment. We're on Apple. We'll look at SPY now. We'll see if we can break back into 471 territory for SPY. Again, it doesn't look very well. If we can get over our 471.16 wick, that's kind of our deciding factor, whether or not we're going to recover on this retracement here. More than likely, we will not. We can pull up for our volume here and confirm. Volume was really good down here at the bottom. A lot of demand for this area. Now we got about 2 minutes left. If we have a decrease in volume here, that would suck. If you're a bull, it'd be great if you're a bear. Typically these sessions, what you guys can expect every Wednesday is these sessions to go from 9 a.m. to 11 a.m. So I'm going to actually go ahead and end the class for today. Okay, I have other meetings and stuff that I need to get to. I also haven't eaten anything. I've had 2 cups of coffee and a couple pecans. So I'm going to go have some breakfast. I'm going to get to the rest of my day. I hope you guys enjoyed this class. I might be able to pop in tomorrow for the session with Bentley. Expect another class next Wednesday, 9 a.m., guys. Thank you so much for showing up and showing out. If you have any questions, my DMs are open. Feel free to follow me on Twitter, or the Trading Collective on Twitter. And a big shout out to Mike and Traderverse for letting me come in and teach you guys a little something here today. I'll see you guys later.